Hey there guys, how you doing? Chillingworth here, hope you are well. I am recording from the trading cabin. I have a cup of tea in my hand, I'm proper chilled, I'm enjoying life, and I was just opening up my trades and I was having a look and seeing what was going on this morning, 9 o'clock AM on Wednesday the 4th of September, and I wanted to share some nuggets of information because there's been some, I'm just going through my data and I've identified something that is actually quite useful to share. Because, you know, sometimes in trading, a lot of it is based on faith, a certain amount of faith. And I don't mean religious faith, I'm talking about faith in systems, faith in what people are apparently telling you is the way to do things. And I put a lot of stock into, no pun intended, into evidence and seeing some actual data, seeing some actual numbers. You know, and so I've got some actual numbers here for you and some actual data here for you that I want to share with you and show you what we're trying to achieve here and why the way I trade works, why it's profitable, why it's consistently profitable. I haven't done a video for two months maybe. Even despite that, subscriber numbers have been growing, so thank you very much if you joined the channel recently and started to subscribe. I think we've gone over 4,000 subscribers now, and it grows every day, so that's awesome. Thank you so much for tuning in, checking out the videos and clicking on that subscribe button. That's awesome. I have been busy writing a book. Now, it wasn't a trading book per se. I do have a trading book that I want to write, and I'm in the process of writing now. In fact, I've got two. I've got one on the technical trading and one on trading psychology that I want to write. But I didn't want to, I went through the self-publishing process using Amazon, and I didn't want to test that process with what is essentially in my head my gold nugget book that I want to write one day about trading, which I'm in the process of doing now. And so I needed a book that I could experiment with, and for a long time I've had some fantastic feedback on a handful of posts that I've put out over the years around how to make more money in life. You know, how to grow more wealth, how to increase your income, and do it practically, you know, actual proven ways to make money. I don't mean gimmicky, you know, sales techniques or, farming mushrooms and selling them for a profit, or, you know, running an Amazon FBA business or flipping things on eBay. I'm talking about hardcore, down to the real fundamentals. What do you need to do to be making more money in the world? So we're not talking about actual techniques and ideas for businesses or anything like that at all. I'm talking about how you manage your money. Where do you put your money? How do you control the wealth that's coming into you so that you can grow it to make more? And you don't need necessarily any of these businesses. You don't even need to have a business to make this work. It's all about how do you manage the money you're already getting so that you can make more. And I've always had these posts that I've pushed out, and the feedback from them was always amazing. People sending me messages and saying this is the best financial advice I've ever had. No one ever taught me this at school, that sort of stuff. And so I had this book in my head on that particular subject, and I decided to write it. And it's called The Clean Guide to Making More Money. Hashtag or colon how to manage finances, increase income and grow your wealth from today. And this is available on Amazon. It's at $10.99. It's only on paperback at the moment. There's no Kindle, but there will be a Kindle eventually once we get around to doing that. But it's my first ever book, and I'm over the moon with it because the reviews have been amazing. I mean, we've got 4.7 out of 5 stars, which is superb. Only 10 reviews so far, but that's still pretty cool. I mean, there's some books out there that I've really enjoyed that have got less than 10 reviews on it. So, you know, it doesn't really mean too much. But thank you to those who have read the book, bought the book. Thank you again to those who have bought the book, read the book, and left a review on it, because all the reviews have been awesome. And yeah, I had a message from somebody yesterday saying the book has literally changed their life. So, and it has the potential to genuinely do that. If you haven't known this stuff, if no one's ever taught you this stuff at school or your parents, because I certainly didn't know this stuff until I was sort of 30 years old when I started to learn it myself. You know, and if I can get this book in front of people to read it at an early enough age, it can absolutely transform their lives in terms of the money that they can then go on to make in their life and the wealth that they can grow. So yeah, that's out, and I spent a lot of time writing that and putting that out, which is why I've not been quite so active on YouTube and doing other things. But what I wanted to talk to you about today is this data that I want to show you. So here we've got 5 positions in the bottom left corner of the screen. This is the open portfolio. This is the 5 positions that are left open from 14 trades that we've made on this system, which is a 1-hour system that trades UK stocks, a system that I use, and I've been teaching a few people this now after trading it myself for quite some time and doing plenty of back testing on it. I know it works, and I just wanted to show you some data that I think will be very useful to anyone who's trying to get their head around this approach, this general approach that I use, which, you know, is kind of like trend following in a way. It's trend following fundamental or foundational rules behind it all, but used on a more of an intraday basis. And I want to show you some data that's going to help people digest what this is all about, because this is essentially a numbers game. I've not made any predictions on any of these companies. I've got no reason why I think any of these companies are going to do better or worse than any other. You'll see that I'm short on BT Group, I'm long on Diageo, Rightmove, Diploma and Relx, and there is no thought process behind that, in so much that I just took the signals when they came. So there was no wizardry there in trying to predict that any of these companies were going to go up or down. They just generated a signal and I took them. So here's what I want to show you guys. Basically, we've got 14 trades. 9 of them have now closed. That's why they're not in the positions column here, in the window in the bottom left-hand corner. 9 of them have been closed. They've all been closed for losses. So 9 trades out of the 14 have been closed for a loss. Okay. Now this tends to be what happens with our portfolios, because what will happen is, say you open 15 trades, 9 of them will probably close for a loss. Maybe 5, 6 of them will survive. And what will happen is you allow those, essentially those losing trades will close much, much quicker than the winning trades, generally speaking. Why? Because we use a moving average crossover system that basically says that when a trade starts doing well and comes back against you, the moving averages cross back over, we get out of that trade pretty quick. If a trade goes bad straight away, like the next day or within the same day sometimes when you open a trade, again, we close it pretty damn quickly because the moving averages cross back over again. And so with a moving average crossover based system, you tend to find your losing trade, you get out of them very quickly. The winning trades tend to take a lot longer to generate an exit signal, and rightly so. So these trends, they form and we follow them and we ride them all the way until the moving averages cross, like we do on every single trade. But what happens with the winning trades is that they tend to go on for a while. Sometimes these trades can last, on this particular system, they can last a few months, and we'll just ride them all the way until that exit signal comes along, and then we'll bank it. Practically speaking, what that means is that when we look at our portfolios, from the very beginning, you might have 15 positions in there, but very quickly you're going to whittle those down to just the good ones. So all the deadwood, all the losing trades, we ditch them really quickly, and we only keep the good stuff. Okay, and this is the good stuff so far. And you repeat that cycle. So now we would open another load of trades. The majority of those will be losing trades. We'll get rid of them, and we'll keep the good stuff. We'll remove the deadwood and keep the good stuff. And we'll repeat. We'll do it again, and again, and again. And slowly some of that good stuff will get closed, and we'll start banking some profits. We'll start banking some winners, I should say. What you'll find is this is a conveyor belt. And each time you go through this process of opening, let's say 15, closing 9, allowing 6 to run, and eventually getting that exit signal much later down the line, you're looking for those winning trades to outweigh the losing trades. You're looking for the winning trades to make more money than you've lost on the 9 losing trades. And if you can achieve that, and you just then cycle and cycle and cycle, the whole thing is scalable. In so much that when you keep doing this and you keep making profit, if you reinvest that profit into your trading account, then you've got more to play with. And it's just a profit-making, money-making machine at that point. So let me show you some raw data. This is what we've been doing. So these are the, I think there's 14 trades here. That sounds about right. 14 trades, yeah. We've got 14 trades that we've made over the course of the last week of August and the first week of September, basically. So we're looking at about 2 to 3 weeks worth of activity, about 3 weeks worth of activity or so, something like that. My BT position was a long-term trade that I took a long time ago that's still in there, still part of the same system, but I took action on that one back in February. We've been holding it till September. Took a very small position on it, and it's grown into something pretty sweet. We should have had a bigger position on that one, but that's just the random one in the whole equation right now. Here's the point I want to show you guys. Okay, this is the key important aspect of this. We have got 9 losing trades, and at the moment we've got 5 winning trades, right? These are the 5 winning trades in that portfolio right now. If I was to put W's into this column here, let's do it properly. You'll see the win rate calculates down the bottom here. 5 winners, 9 losses, 14 total trades. That's a 36% win rate. But yet it's profitable. We're up £306 across all of these trades. So we can run a system that only makes that's a 30% win rate, or 36% win rate, and still make money. Because we keep our losses small, we allow our winning trades to run to their full potential. Now, these are not yet winning trades, of course, and I get that totally. Some of these trades could turn into losing trades. I mean, let's have a look at Diageo PLC here, okay? So this is where we got in down here, okay, and the trade is now right up here. My stop loss is down here. Now I can move the stop loss up to here now at this point if I wanted to. So I just click on my stop and I can drag this up to here, and I've now only got £30 risk on that trade if I was to do that. Okay, now if I did that, I could then continue to trail the stop loss up, and I'll start locking in some profits until we get this exit signal to get out of this trade, which right now is nowhere to be seen. This exit signal on this trade is nowhere to be seen right now. And so if this trade was to turn around now over the next few hours and start coming back down, we could lock in some profits on this trade and we'd take something from it. But generally what I would do is wait for an exit signal with my moving averages on here and take action from there. That's what I tend to do on 99, maybe even 100% of all my trades. I wait for the exit signal to appear with the moving averages and I take action from there, and that's all I do. So what that's likely to happen therefore is that we're likely to see a moving average crossover on this particular system using the moving averages that I use on this system. We're likely to see that occur sooner than the price reaching the stop loss. And so, in fact, we're likely to see it sooner before the price comes all the way to break even. Therefore, we're likely on this trade to bank some sort of a profit. But this could then go on to, 5,000. We've got no idea where this could go. And so we don't touch it. We wait until the exit signal. We don't try and preempt what it's going to do. We don't try and predict where it's going to go. We just wait and let it do its thing. It's a mechanical process. So we're not interested in trying to preempt where it's going to go. We just follow it. And so the really important thing I want to get across in this very short video, I'm going to wrap it up in a moment, is that with despite only having a 36% win rate, we are profitable. We've made money on this trade. Now, this is still open-ended. These trades are not closed. So these 5 trades could turn out to not be as great as they are. They could turn out to be far, far bigger than what they look like now. They're still all live. They can go up, they can come down, of course, and they're doing that right now in terms of fluctuating throughout the trading day. My point is here, we're £300 up on this particular setup, yet we've lost 9 and we've only got 5 potential winners out of all of the trades that we've got here. Of the 14 trades that we've played, we're looking at potentially only getting 5 winners out of the 14, which is a 36% win rate, right? We've just seen that. And so my point basically being that this is typical of what we tend to see. And we run this, and we then open another 14 trades, and another 14 trades, and another 14 trades. And we're killing the deadwood as it comes. All of these trades, look at the R value on all of these trades, 0.5 R. We lost 54% of the risk taken on that trade. So we have a maximum risk amount of money that we're willing to lose on this trade. We only lost half of that. Again, we only lost half of it. Again, only 40% on that one. Only 0.3% on that one. These losses, none of them are out of hand. None of them. They're all well within our risk tolerance level. There is no losing trades here bigger than 1R in value. There can't be. The way I do my risk, my risk management, I can never lose more than my maximum risk on any one trade. And so all of our losses are kept small, but our winners are uncapped. So you're going to have small winners, you're going to have 0.5R winners. You've got a 0.6R winner here. So, we've only got half of the risk in terms of profit. So it's not a great return, but it's okay. It's 61% return on the risk we put on the table. But here we've got 100% return. Here a 60% return. And it's the big winners that really pay it off. This is a 2.18R return on this particular trade. But this is still tiny. And this is the thing. I've had, very commonly, I see 5, 6, 7R winners, sometimes 8R winners, sometimes 10R winners, although they're a bit more infrequent. I've had a 37R winner before. That is 37 times the risk taken on the trade in terms of profit. So if you were risking £200, you're looking at £7,400 return in profit on one trade. Now, I've had one ever, so you don't get them often. My point is the winning trades are uncapped. Okay, and so even with a 36% win rate, you can still make really good returns as long as you keep your losing trades under control. And then Warren Buffett says it when he's investing. He says when you lose, you make sure you don't lose too much money. And that's how he's become rich. And we're using a very similar approach here. We're accepting that we're probably going to lose more times than we win using our approach, which is a non-prediction, mechanical-based approach. We will. The odds are against us at picking more right than we get wrong. That's not going to happen. I've been doing this now for 8 years, and I've never had a win rate above 50%. But I don't need a win rate above 50% to make money, as you can see. If we just closed all our trades out now, which I'm not going to do because we've got no exit signals, we're going to follow the system. The system has served me very, very well for a long time amongst different time frames, different approaches, different moving average combos. The overall approach, this trend following kind of principle, this mechanical systematic trading principle works. And with this approach, you can see here, 14 trades, 9 losers. We've lost more times than we've won. That's what we would expect to see in terms of a win rate with this approach. However, we manage the losses so they are small. Worst case scenario, some of these 5 winning trades turn against us and go back down. And we end up closing for break even. Well, we're just going to do the same process again. We're going to open another 14 trades when the signals come along. And we're going to jump on those trades. And chances are about 30% of them will be winning trades. And we'll hold on to those winning trades. And we'll open another 14. And of those, maybe about 4 or 5 of them will be winning trades. And we'll hold on to those and we'll kill the deadwood. And we'll open another 14. And you see how this conveyor belt keeps going. This machine keeps turning. And we keep growing. And all we're looking for on each rotation of those 14 trades or however many trades they are, what we're looking for is for the winners to outweigh the losses. And if they do, we're golden. We're doing well. We are growing our account. And that's essentially what we're doing. And some people are doing this on a larger scale. Some people are doing this on a smaller scale. But this is why when traders come into this style of trading and they decide, I'm going to open up 2 trades for the first month, I say to them, you've got to be more active. Because if you've got a 30% win rate, chances are those 2 trades are going to both be losing trades. You need to be more active. You need to be opening more trades. Now, there's a middle ground here because, again, I've had clients before that have got so excited about learning this. Once they've done one of my courses, I had one client who I spent a day with in the office, and we spent a whole in-person day doing some coaching together. And I went home afterwards and I got a message in the evening saying, here are the positions I've opened up. And this person from no positions had opened up a 40 position portfolio. And I was just like, what on earth have you done? She was just like, her response was, it was just like buying shoes. And I was like, well, this is why you've gone crazy then, because you need to close this one, this one, this one. And I just went through it all and told her which ones to close. Basically, it was crazy. She'd gone way too far. But on the flip side, or on the other end of the spectrum, we've got traders as well who are opening up 2 positions, and it's not enough to find the winners. She's got more chance of opening 40 trades of finding those winners, but unfortunately it left her to be massively overtraded and above her account size. She was risking far too much of her account on these positions all in one go. It was a bad move. And it's finding that middle ground, essentially. You might want to open 10 trades. Well, if you open 10 trades, you're likely to only see maybe 3 winners out of the 10. But that's fine, as long as you can find a few winners and then hold on to those and kill the losses quickly, and then recycle, do the same thing, do the same process over and over again. Now, you're going to get some cycles where all of them are losing trades. But you're also going to get some cycles where you place 10 trades or 14 trades or however many that might be, and you've got 8 winning trades. That happens. Now, you tend to get more of the cycles where you've got more losing trades than you have winning trades. You don't get many cycles where you've got more winners in there. But over time, over many, many cycles of this process, you are slowly accumulating these winning trades. And generally speaking, I would say 80% of your profits will come from maybe 4 or 5 of your trades out of hundreds of trades. I.e., what I'm saying here is that you're probably going to pick up 4 or 5 trades that are huge, that make you a ton of profit over that year. And by running this cycle, you'll find them eventually. You'll pick them up. You'll jump on these big winning trades. And you only need a handful of those to absolutely make a stonking year. But even if you didn't find any big winning trades, if you only found 5 or 6 R winners, you'd still be making money, you'd still be growing. And that's what I love about the system. Now, my role in all of this is to try and show people, set the expectations of what trading in this system is like, trading in this way is like. And it's extremely difficult when people are taking these systems on. These trades, for example, by the way, are in chronological order of closed trades. Now, any trader coming into this who's not ready for this, who's not looking at this, will see an 8-trade losing run, and they'll be on that. They will trade the system, and the first 8 trades will all be closed as losses. And you know what they'll say? They'll say, system don't work, mate. It's rubbish. I've opened up 14 trades, and I've got 8 losses in a row. This is a stinker. And they'll move on to another system and carry on going around in cycles for years and years and years, not making any money. In fact, losing thousands of money. Thousands of pounds or dollars or whatever. My job is to try and show people what's going on underneath, why this system works. And if you can understand this concept that, yes, you're going to have to go for an 8-trade losing run, you might find that that's going to be the case, I should say, because your losses are going to close before your winners do on most occasions. And so, yeah, starting off, you're going to go through that. But when you go through the next cycle, again, you're going to go through that kind of losing run. But remember, you've got 5 trades in your account all growing. Hopefully. Some of them may come back down. We'll wait and see. And then you'll add more to the pot. You'll kill the deadwood, you'll add more to it. And then you do another cycle. And it gets easier and easier further you go. But obviously from the start, the initial momentum is difficult because you've got to get through that losing run to start with. You're going to close off all that deadwood. And this is why you've got to be cool with failure. This is why you've got, the idea of needing to be right has got to get out the window. Because if you're worried about being right and you're worried about your image and what people might think, and they might think you're a rubbish trader if you're making 8, 9 losing trades in a row, well, then you're going to struggle. But if you can abandon that and you can be cool with failure, and you can understand that failing is part of the process of finding the gold, that without swinging the axe and digging, you ain't going to find nothing. If you can be cool with that, you can make this work. And that's all I wanted to say today. Hope it's been useful. I'll see you in the next video. Cheers, guys.